Welcome back to the Roots Podcast. I'm Max Moore, joined by my co-host Tyler Lingle. And today we're going to put Tyler in the hot seat on another round of Roots Ranks. We're going to be ranking the 5 profit centers from most important to least important. If you don't know what the 5 profit centers are, they are cash flow, appreciation, tax benefits / savings, principal paydown, and then your inflation hedge. Cash flow is the net income that your property is making above the expenses. Appreciation is the increase in property value over time. Tax benefits, obviously your deductions, your depreciations, and some strategies to reduce taxes like, segregation and different things. So principal pay down, the equity you will build as tenants pay your rent and make your mortgage go less. Inflation hedge is, rents and property values often rise with inflation and they can outbeat that inflation pace. So with that, Tyler, here's how the game works. I'm going to throw each of the 5 profit centers your way. You've got to rank them 1 through 5. You can't move it. So if you say appreciation's third, it stays third forever. You're going to have to defend why. And at the end, I'll reveal my answers and we'll see how closely aligned we are. Are you ready?
Let's do it.
Let's go. First one out there, tax benefits. Where's it rank? 1 through 5.
Tax benefits, number 3.
Number 3, tax benefits coming in hot. Why?
Because I'm a realtor. I'm a tax professional status. So all those deductions, every expense, every broken water heater renovation.
Wait, let's talk about
I can offset my active income and pay no personal income tax.
Okay, what if I'm not what if I'm an agent, I don't own rental properties, and I made like 150 grand per
Then you're
year?
an idiot.
How much am I going to save though?
Depends on how much you made and how much you spend on your rentals.
Right. I'm saying like 150K in
150K and you have one rental,
yeah.
you'll save like 5K.
5K and I'm getting paid to do it?
Yes.
That's sick. What about W-2? How much does it help there?
W-2, it's passive income, which you can't offset with active income. So it does not help you. It only will offset your passive income. So your rental income.
Okay. Well,
but if you're making other passive income, then it can be, so if you have stocks income and real estate income, it can offset because it is losses in that same category.
Okay.
So it just depends.
Yeah. No, I think
so. It's still pretty powerful.
That's totally. So we're having
number 3
benefits. Number 3. What about where are you ranking principal pay down?
Principal pay down, number 4.
Okay. Right under 4. Tax benefits, principal pay down. Why?
That's how I feel about it. It's cool.
Fair.
It's great. However, it is low at first because you're paying mostly interest.
Okay.
And that is a bit of a downer for me.
I guess from the perspective...
It's a slow build there.
Of somebody who has been investing for 4 or 5 years. You haven't quite seen the benefit yet.
Correct. It's a slow build.
Okay.
I haven't owned a lot of my properties long enough for it. More depresses me when I look at how low it has gone.
You're like, didn't I buy this for 150? Why is it still 148 that I owe?
Right. It's like 1,000 a year for so many years.
Yeah. I guess for me, it just feels like free money. Like it's a little piggy bank that's getting filled up.
It's a piggy bank. Exactly.
Okay.
It's a good little piggy bank.
Not as good as tax savings, but it becomes
crazy once you own 10, 15 years. Like what you're making from it is wild. You're right.
Very fair. Okay. So thus far, add it to the list. Number 4, principal pay down. Where are we ranking cash flow? That's the burning question.
Cash flow, number 2.
Number 2, cash flow. Not number 1?
Number 2.
Why?
Cash flow is important because it creates liquidity, which is like greasing the wheels. If you don't have cash flow, you're probably going to sell it. Number 1, because it's going to get annoying eventually to put money into this investment.
Right.
I don't want to own an investment that requires money to continue.
And that's because you can't buy equity with buy equity with grocery stores. Sorry. You can't buy groceries.
You might
put the cart before the horse there. You can't buy groceries with equity, obviously.
Right. Cash flow is fun to make. It's nice. It's income coming in.
It's energy.
It's energy. It's the most sexy and the most fun to make.
But you can't find it anywhere.
Not true necessarily. It's harder than ever. Let's just say that, right?
That's fair.
You can cash flow. My new group is about to cash flow a lot.
Right. Maybe. We could argue that in a different video.
Duplex. Yeah. Quick pause here, because if you own property in Indianapolis, your contractor matters more than you think. That's why we've consistently recommended Nick Giuliani and the team at Off Leash Construction. They handle everything from small repairs to full-scale renovations, and most importantly, they do the things the right way. They have an insane new tool that lets you upload your inspection response and get a quote in minutes. Check the link in our bio to check it out and connect with Off Leash. All right, back to the show.
Cash flow. Number 2, heard it here first. It's not the most important. You don't buy properties because of cash flow. Where do you put the inflation hedge?
Number 5.
Womp womp.
Down at the bottom.
Down at the bottom. Why? You don't like to outpace the gov?
Because inflation's like 2.5 right now.
Okay.
So we're talking about 2%.
Yeah.
I don't know.
Present day inflation.
If inflation was way
good.
higher, 10%, okay. Then we're like meaningful amounts of money that you're saving because you're spending so much and everything else.
It's almost irrelevant.
Right.
Nobody's talking about.
Nobody's thinking about it. It's a nice bonus. It's a cherry.
It's a cherry.
It's a little cherry on top.
Yeah. Nobody's caring about.
No one is buying real estate for that alone.
Most of you thought about the 5 profit centers and you went, what's the number? What's the 5th? And it was inflation hedge and you forgot. Okay, fine. So the one that we talk about all the time, you guys at home hate hearing about it because it's your realtor shoving deals down your throat. Where do you rank appreciation?
Number 1.
Why?
It creates the most wealth.
How?
How? Because real estate is harder than ever to build and there's limited supply. And the fundamentals are there for properties to continue to appreciate.
Right.
Because our inventory problem hasn't been solved, right? It's more expensive ever to build new homes with materials, labor, et cetera, et cetera. And so owning real estate is a great way for it to build equity and wealth. And because if you put 10% down or even 20% down and you make 10K and your down payment was 50, you just made 25%.
Right.
So it's for leverage, it's the greatest multiplier.
Yeah. All boats will rise with a rising tide, right? And that
Correct.
is what the appreciation is, especially when you're in an appreciation heavy market. Any market appreciation, I would argue, is number 1.
Should be.
There are cash flow heavy markets where we're like, all right, this turd 100K property is going to be a turd 100K property forever. And we're okay with that because we're making 10, 15, 20K a year. Or you're buying a cabin out in Gatlinburg. Right. Like, I don't know how well those are appreciating, but I'm sure they're cash flowing extremely. And there's more tax savings there. So it does come down to the personal strategy. In Indianapolis specifically, though, we are primed to boom up.
Correct.
Cash flow will lag. It'll be the lagging indicator of the effects of the equity unlocked. So,
right.
All right. I got to reveal my answers.
Let's hear it.
I had appreciation, number 1. Principal pay down, number 2. I had, I made fun of it while Tyler was going through. Actually, I had hedging inflation, number 3.
Whoa.
Cash flow, number 4. I did not think about the active income for taxes. I don't do my taxes, so
Taxes were lowest for you.
I would switch inflation and taxes. I was not thinking fully there. I genuinely saved lots of money last year owning rental properties, and will continue. I think
why
I wasn't thinking about just for me there.
Right.
I was thinking about genuinely across the board. So that W-2 earner that you were talking about,
right?
I think for them out at hedging inflation is better than looking at it from tax perspective.
There you go.
If I was thinking about it from max, I would flip those easily. So
why was cash flow number 4?
Because I have yet to see it. And that's why I said I'd argue it in a different video under new group
But wait, that should make it still important.
It should still be important, but I care more about my principal getting paid down than my cash flow because I've paid for 3 furnaces in the past year. I've paid for bigger portfolios, have bigger portfolio problems. I've constantly having to do maintenance, constantly having vacancy. It's never 100%. When it is, you're going to get a text from me that says something along the lines of what you texted me last week. It's great when rentals actually pay on time and cash flow, like it feels really good. But when it doesn't,
you got to get everything right. Yeah.
And it's just hard to have that synergy.
Yeah, I'm still going number 2 with it.
But you know what happens?
Number 2 with it.
Without a doubt, my principal gets paid down either by my tenant or by me. So it's happening.
There you go. Money back in your pocket.
Have it here first. Got to build up those piggy banks or get them cash.
See us next time on Roots Ranks.